Ladies and gentlemen, today we do not merely mark a milestone. We honor a legacy, one that began in 1950 with a bold vision, a deep sense of purpose, and an enduring commitment to the people of Sri Lanka. This oration follows the 75th anniversary celebrations held yesterday, along with a series of meaningful events organized in honor of this historic milestone. These events have been made possible through the dedicated support and collaboration of the various departments and associations of the Central Bank of Sri Lanka. We celebrate the foresight of our founders, the resilience that has carried us through decades of economic change, and the hope that continues to shape our path forward, a future grounded in integrity, innovation, and inclusive growth. This 75th anniversary oration stands as a moment of reflection and of renewal, a tribute to the past, a reaffirmation of our purpose, and a commitment to the generations yet to come. Ladies and gentlemen, it is now my honor to invite Mrs. Nelumani Dawlagala, Senior Deputy Governor of the Central Bank of Sri Lanka, to deliver the welcome address and introduce our keynote speaker of the 75th anniversary oration. Over to you, Madam.
A very good morning to all the distinguished invitees, colleagues who are present here today. It is with immense pride and heartfelt gratitude that I welcome you all to this historic 75th anniversary oration of the Central Bank of Sri Lanka. Today marks not merely a milestone in our institutional journey, but a testament to the 7.5 decades of unwavering commitment towards economic and financial stewardship of our beloved nation. We are deeply grateful to have among us this morning an esteemed gathering of guests whose presence reflects the significance of this occasion and the strength of partnerships that we have built over the decades. Allow me to extend a very warm welcome to Governor and the members of the Governing Board, members of the Monetary Policy Board, members of the board-appointed committees and other committees of the Central Bank, former board members, deputy governors, and assistant governors, chairpersons of and CEOs of licensed banks, licensed finance companies, and primary dealers, distinguished invitees, and of course, our assistant governors, and all my colleagues at the Central Bank of Sri Lanka. Your presence at this momentous celebration of our institution's 75-year journey is indeed an honor. As we gather to commemorate 75 years of central banking, we reflect on a journey that began in 1950 with a vision to establish monetary stability and foster economic development in our then newly independent nation. Through decades of challenges and triumphs, economic cycles, transformations, the Central Bank of Sri Lanka has remained steadfast in its mission, adapting to global changes while staying true to its core mandate and serving the people of Sri Lanka. The Central Bank has evolved with the times, strengthened by its independence, driven by its mandate, and guided by a commitment to serve the nation with professionalism, transparency, and accountability. This commitment continues with renewed purpose as we look forward towards the future. In this spirit, it is my great honor to now introduce the distinguished speaker who will deliver the 75th anniversary oration, a leader whose career embodies the very essence of central banking excellence and institutional dedication. It gives me immense pleasure to introduce today's speaker, our very own Dr. Nandalal Weerasinghe, Governor of the Central Bank of Sri Lanka. Dr. Weerasinghe's journey with our institution spans nearly 3 decades of distinguished service, during which he has served in various capacities, including the Chief Economist and Director of Economic Research, assistant governor, deputy governor, and senior deputy governor. His deep institutional knowledge, combined with his international experience as an alternate executive director for India, Sri Lanka, Bangladesh, and Bhutan at the International Monetary Fund, brings unique perspective to monetary policy and central banking. Beyond his role at the central bank, Dr. Veera Singh has contributed to the global discourse in economics and finance as an independent consultant for multilateral agencies and global investment firms. His academic contributions as visiting lecturer at the University of Colombo, visiting research economist at CSN Center in Malaysia, and visiting research fellow at the Australian National University have enriched both policy and academic understanding of monetary economics. As governor of the central bank, Dr. Veera Singh chairs the governing board and the monetary policy board, and also serves as the chairman of several critical committees, including the AMS-CFT National Coordinating Committee and the Financial System Oversight Committee. Dr. Veera Singh also serves as a member of the Finance Commission of Sri Lanka, demonstrating his commitment to comprehensive financial sector governance. His scholarly contributions include numerous research papers published in both international and local journals, reflecting his dedication to evidence-based policymaking. Dr. Veera Singh holds a PhD and a master's degree in economics from the Australian National University and a Bachelor of Science degree from the University of California. The recognition of Dr. Veera Singh's exceptional leadership extends far beyond our shores. The Global Finance magazine rated him as an A-grade central bank governor in 2024, and as you have heard yesterday, we got the news that he has been rated A-grade again this year as well. So that is acknowledging his outstanding performance in inflation control, economic growth objectives, currency stability, and interest rate management. This international recognition was complemented by him being named as the Sri Lankan of the Year in 2024 by the Lanka Monthly Digest, which is a testament to his pivotal role in steering our nation through challenging economic times. Under Dr. Veera Singh's leadership, the central bank has navigated complex economic challenges while maintaining its commitment to transparency, accountability, and public service. His vision for a modern, resilient central bank that serves as a pillar of economic stability continues to guide our institution as we embark on this next chapter of our journey. Ladies and gentlemen, as we celebrate 75 years of central banking and look forward to the future with optimism and determination, I invite you to join me in welcoming to the stage Dr. Nandalal Veera Singh, Governor of the Central Bank of Sri Lanka, to deliver the 75th anniversary oration. Governor, the stage is yours.
Good morning. Thank you very much for this very kind and comprehensive introduction, Senior Deputy Governor, Mrs. Javadekar. And before I start delivering the oration, I think I want to make a remark, especially on this central bank recognition as a grade central bank, the third consecutive year. I must say this is a recognition for the Central Bank of Sri Lanka as a collective efforts and teamwork by the members of the boards and the management and staff of the central bank. This is indeed a recognition of your work, not necessarily the personal to me. I am only the governor of the central bank. That's the first comment I want to make. So this is in terms of the management and the oversight, members of the boards, the current and the past, especially during the last 3 years. They have the responsibility of mainly the decision making and the oversight. So that's important role that they played so far. The management and staff is obviously has a executive function as well as the responsibility to deliver the mandates in terms of policies that boards have been taken. So this is basically a recognition of all of you, the work that we have collectively done. A recognition is good. In fact, the role of the governor of the central bank has an important role, is obviously the face of the central bank, mainly to coordinate between the board, management, the staff, and also with all the external stakeholders beyond the institutions. So for that reason, I must say governor, central bank, any governor, needs, as SDG mentioned, needs exposure to technical competency of the central banking. That's one important necessary condition in my view. And secondly, most important other one is the leadership. That also is something that a leader, governor should be having. I'm still learning how to become a good leader, but I now see the value of a leadership. To get the institution to a world-class level, we need both, not only technical competence, but also leadership. That's where, in my tenure, I try to develop the skill among our staff to make future leaders. Those are not only technically competent, already our staff. People are very technically competent, high standards, world class. But they have to be equally competent. The leadership skill, that's only institution can become world recognition. I think that's what our mission going forward. That's one of the things I must make a remark. And also, I want to say, any recognition or rewards are not necessarily we are working for. Once we remain committed to deliver our mandates, irrespective of whether we receive recognition or rewards, but it's our commitment. And once you do it successfully, then those will come, will follow you. So that's what I think my message today, just before delivering. And again, please, for the staff and the management and the boards, let us give a round of applause to recognize their contribution. Thank you. So that's not part of the oration. So let me now deliver the oration, which is very timely in my view. Why central bank independence matters in crisis, in recovery, and even beyond for the future. I'm deeply honored to be delivering this oration on this important occasion, 75th anniversary of the central bank. As the governor of this great national institution, I expected the task of delivering this oration on this theme at this landmark moment with a deep sense of responsibility, knowing that the work of central bankers is never complete. The lessons the country, its people, the central bank, and staff, and the leadership have learned over this long history must be recorded and shared, enabling future generations to build on and contribute to the prosperity of the people of Sri Lanka better. Before I begin, I would like to take this opportunity to extend my heartfelt thanks again to all well-wishers and stakeholders, especially the dedicated staff, for their invaluable contributions towards achieving the objectives of the central bank for the past 75 years. In particular, I wish to express my deep gratitude to the members of the central bank boards, current and also in the past, and the staff for their external commitment, for their commitment over the past 3 years, especially during the crisis period. The tireless efforts played a pivotal role in stabilizing the economy and laying the foundation for a swift and sustainable recovery from the most profound socio-economic crisis Sri Lanka has faced since independence. So, 7.5 decades ago in 1950, our nation took a momentous step towards economic sovereignty with the establishment of the Central Bank of Ceylon in 1950. This was a decision that our founder governor, the next that you can see here, noted as demonstrating, quote, intention to achieve genuine economic freedom, unquote, that Sri Lanka had gained just 2 years earlier. This means that before the independence, its independence, economic independence, sovereignty is also important. Looking back, you see that the journey of the CBSL has been one continuous learning and evolution to enable such freedom. Today we will reflect on how the central bank has evolved over the last 75 years and need to protect gains in terms of independence and accountability. Accordingly, over the next hour, I expect to carefully build my case on why and how a Sri Lankan must preserve and promote the central bank's independence and its accountability. As outlined here, I will attempt to examine the concepts of central bank independence, summarize the Sri Lankan experience, before addressing some common myths and criticism surrounding central banking in Sri Lanka. So first part is why understand the central bank independence, why this is important. So I'd like to quote the president of the Deutsche Bank, Joachim Nagel, recently stated that independence is part of DNA of central banks. Allowing a central bank to make its decisions and operate without being influenced by the government or politicians for short-term political mileage is called independence. That's how we define it. This will allow a central bank to focus on its mandates, such as maintaining price stability and financial system stability for most central banks, while political institutions, and by exception fiscal institutions, typically focus on a shorter horizon such as an election cycle. Institutions such as central banks, independent institutions especially such as central banks, function best with independence, since maintaining stability, the co-function of central banking, is a long-term necessity for any economy that pursues prosperity. Moreover, the central bank independence does not imply complete detachment from the government. Rather, it is the ability to exercise technical and professional judgment in pursuing its objectives without interference from the government for short-term political gains. At the same time, independence does not mean that a central bank can formulate and execute policies without being answerable to anyone. The independence of a central bank comes with great accountability and also transparency. Central bank independence is beneficial to modern economies. It's backed by both theoretical approaches and practical case studies that I will make some citation here, including Sri Lanka. Jeremy Powell, the current chair of the Federal Reserve, stated in 2024 that, the quote, "The record that central bank independence is a good institutional arrangement that serves the public well is pretty clear," unquote. Empirical evidence shows that the central bank independence is associated with lower and more stable inflation without the trade-off of long-term growth stagnation. During the last 3 decades in particular, there has been a strong trend toward enhancing central bank independence in both advanced and emerging economies. It's not something that we invented. This is best practice of central banking. So why does independence matter? In the first place, central bank independence matters because it allows monetary policy to be shaped to support long-term economic stability without being subject to short-term political pressures, as I mentioned earlier. Economic theory, and especially the time inconsistency problem put forward by the famous researchers Kidland and Prescott in their papers, suggests that governments and politicians may encourage short-term growth or alleviate temporary rises in unemployment, often by money creation or simply by keeping interest rates artificially low. This in turn leads to very high levels of inflation with eventual adverse consequences for people and of course the credibility of the central bank. The central bank is independent and has a clear mandate, which in most cases is aimed at maintaining price stability. It can help a central bank to stand against such temptations and act objectively and on available data and pursuit of its long-term objectives. This builds trust among markets and the public, helps contain cost of living pressures, prevents wage price spirals, keeps inflation expectations well managed and anchored, makes production costs more predictable, and therefore sets the stage for being able to maintain economic stability with predictable economic policies, thereby producing positive spillovers that ultimately improve overall public welfare. That's why independence matters. Central bank independence is also a critical requirement for maintaining the stability of the financial system. That's our second objective. The ability of a central bank to enforce micro and macroprudential regulation uniformly across all deposit-taking institutions, irrespective of their ownership structure, whether state-owned or private-owned, or shareholders, and devoid of political or market influence, would ensure a sound and stable financial system, which is also necessary feature in a stable economy. Central bank independence facilitate financial innovation as well. So I quote one of the IMF working papers, which quote, a new measure of central bank independence shows that the financial independence and governance autonomy are foundational for central banks to experiment with new instruments and technologies. Essentially, independence is not just about maintaining stability, it is also the engine that allows central banks to shape the future of finance. So that's an additional element. As I will discuss in a later section, unfortunately, the Sri Lankan public and businesses had to learn the hard way of repercussions of lack of central bank independence and the consequence of fiscal dominance during the build-up to the 2022 crisis. While many do not speak about this anymore, Sri Lanka also experienced the benefits of allowing the central bank to operate independently at times, most notably the sharp disinflation process and protecting the financial sector from near collapse, both of which enabled the economy to record a rapid rebound from the depth of the crisis that we had in the recent past. The second part is accountability. Why the accountability is important for an independent institution. Alan Blinder, former Vice Chair of Federal Reserve and Professor of Economics, I like to quote him, quote, because monetary policy actions have profound effects on the lives of ordinary people, central bank in a democracy owes these folks an explanation of what it is doing, why, and what it expects to accomplish. It is their economy, not ours. They are not elected of institution. Is elected by the people. The economy is theirs, not ours. It has to be emphasized that the independence cannot stand alone. It must be matched with the strong provisions to ensure accountability. Because independence has been granted to fulfill the central bank's mandate, the institution is obliged to explain and justify its decisions. Independence and accountability are essentially two sides of the same coin. Central banks do not and should not operate in a vacuum. Therefore, as institutions in the service of the general public, central bank must ensure that the public and politicians see our decisions as underpinned by our mandate and the broader interests of the society and the public. Therefore, for the central bank's independence to be democratically legitimate, there must be a two-way dialogue. As an institution that directly affects people's lives, central bank must be open to scrutiny while consistently explaining and justifying its actions openly, clearly, and in ways that resonate with the ordinary member of the public. Transparency helps bridge independence and accountability. This commitment to a high degree of openness about policies, operations, governance, and outcomes focuses on explaining the central bank's work not just to the financial elite but to every citizen, no matter how bitter the truth may be or how painful the central bank decisions may appear to be. As South African Reserve Bank Governor, current one, Lestia Kanyu stated, quote, for society to appreciate our roles, we have got to take society along with us, such that when central banks come under attack, it is not just going to be us defending our independence. It has to be done by the society and the larger public. This is why broader society must understand what the central bank does and why it does so. This is why central bank needs to be accountable and transparent. This is a key feature of the current act. Let me just share a few ideas, or as I said earlier, these are global best practices. It's not innovation by only few of us. Beyond theory, experience across countries show us time and again that independent central banks can act decisively, conducting credible monetary policy and safeguarding financial stability even during periods of turmoil. As seen, the central bank, those who had independence for long periods, especially advanced economies, have seen this feature. When independence, how it has worked, for example, I can share a few examples. First, the New Zealand, for example. Since gaining independence in 1989, the Reserve Bank of New Zealand has been a pioneer in inflation targeting. Its clear mandate, operational autonomy, and commitment and transparency enable it to respond swiftly during crises such as first the Asian financial crisis and the global financial crisis. By adjusting policy rates and supporting domestic banks through liquidity facilities, it helped anchor inflation expectations and maintain financial system stability. Similar advanced economies examples can also found, for example, as I mentioned earlier, Canada, UK, Sweden, United States, and Eurozone, that they have been having this and the successful implementation of during their mandates. So still, this not only advanced economies concept or best practices we have seen as New Zealand, as well as the most emerging market economies. That's where the debate is. That the one example that I share with you is Chile. Chile offers a compelling case of a country that enshrined central bank independence in its constitution to overcome a history of persistent high inflation. For decades, political interferences and weak institutional frameworks meant that the Central Bank of Chile was unable to secure the stability of the currency, with inflation frequently reaching triple digits. However, in 1989, this is a long time ago, Chile made a landmark decision by enshrining the central bank independence directly into its constitution. It's a very strong reform. Through the Basic Constitutional Act, the nation collectively committed to prioritizing long-term stability over short-term political expediency. Central Bank of Chile has since brought inflation down to stable single-digit levels, providing the essential foundation for sustained economic growth and investor confidence. In the neighborhood, the experience of India is also provide very valuable, useful insights. For decades, the Reserve Bank of India has navigated a path of evolving independence, seeking to balance its mandate of monetary stability with the demands of a rapidly developing nation. This created an environment that at times required difficult and steadfast policy decisions. However, India has consistently demonstrated a commitment to strengthening the RBI's role, culminating in formalization of its inflation target framework and the amendment to the RBI Act of 1934 amended in 2016. These examples show that independence is not merely a legal construct. It's a functional enabler of stability, credibility, and innovation. So then let's look at if independence was compromised, what would be the outcomes? Augustine Carsons, former general manager of the Bank of England, Bank of International Settlements, BIS, aptly observed, the quote, "Through history, we have had quite substantial episodes where monetary policy mismanagement has led to devastating effects in inflation, in financial systems, affecting the well-being of individuals and firms, oftentimes bringing countries to the brink." Examples are Germany's hyperinflation in 1920s, Argentina's recurring debt and inflation crisis, Zimbabwe's collapse in the late 2000s, and the United States' great inflation of the 1960s and 70s. All serve as reminders of the risk when central banks are pressured to finance fiscal deficits or support short-term political goals. As we reflect on these global experiences, we see that the lesson is clear. Central bank independence is not a privilege, but a necessity. The ability of a central bank to act decisively, maintain credibility, and provide steady anchor in the storm of economic uncertainty is the result of independence. This independence is what allows a central bank, including ours, to safeguard the future of our economies. Let me just go back a little bit from the inception of central bank under the Monetary Law Act of 1949 to the current act, just to reflect on how we have been moving along. This is a good occasion for us to reflect on that at the occasion of 75 years of celebration. Over the past 75 years, Monetary Law Act of 1949, what we call MLA, has been the subject of much discussion and debate. I'll not attempt to revisit every argument about its strengths and weaknesses. However, I believe, we can all agree on one fundamental point. The MLA was a piece of legislation far ahead of its time, the vision of John Exter. It's incorporated many forward-looking features and provisions designed to facilitate sound central banking practices and principles, some of which remain relevant even today in the modern central bank. While the MLA had served its purpose for decades, it had not undergone a comprehensive review in line with the evolving challenges of monetary and financial stability. By the early 2000s, it was increasingly evident that the MLA was outdated or needs some revisions, both in terms of institutional design and in providing credibility required for modern monetary policy making. Sri Lanka was also preparing to move towards flexible inflation targeting, what you call a FIT framework, in line with global best practices. This is again one of the best practices. A regime that demands a clear mandate for price stability, greater independence, and robust accountability mechanisms. Without reforms, the existing legal framework risks undermining credibility and weakening the effectiveness of monetary policy. Another key deficiency in the current context of the MLA was that success of policymaking was person-dependent. This was recognized by John Exter, who had very foresight, who, while proposing the establishment of Central Bank of Ceylon at that time, also noted that its success in serving the nation would depend on, quote, proper skill and understanding in its management, unquote. Referring to the relationship with the government, Exter noted, quote, the effectiveness of cooperation and coordination between the monetary board and the government will depend more upon the men occupying the key positions at particular times than upon any legal formula, no matter how carefully or elaborately it might be worked out, unquote. This is a very foresight view where we all is valid for the future as well. History bears out Exter's insight. While the autonomy of the central bank was compromised from time to time, there are notable instances where the monetary board exercised independent judgment, even with the Secretary of Treasury as a member, that we see as a compromised independence, but still monetary board has been able to exercise independence at times. These episodes confirm Exter's view that good central banking is less good law than good practice. That's why it's very important to exercise and practice the good central banking, and that exact degree of independence of the central bank is likely to vary from time to time. This is also important viewpoint from the Exter. The degree of independence of the central bank is likely to vary or dynamic from time to time. Recognizing these deficiencies and evolving needs, the CBSL initiated a process to modernize its governing legislation back in 2017. See, some of the staff and members are also was part of that. In April 2018, a cabinet memorandum was submitted seeking approval in principle for reforms to the country's central bank law. That happened, initiation was in 2018. It was a part of this process as a senior deputy governor then. Subsequent approval gave momentum to drafting a new Central Bank Act, what we call now CBA, with the CBSL playing a lead role in shaping the provisions. Drafting was guided by three overarching objectives. What are three overarching objectives that guided the reform drafted in 2018? First, strengthening the governance of the institution. Second, securing independence and accountability to support the adoption of flexible inflation targeting framework and ensure durable price stability. Thirdly, enhancing financial sector oversight and resilience in order to deliver the financial stability mandate. The draft legislation reflected several critical reforms. Price stability was formally recognized as a primary objective of the central bank, supported by a strengthened institutional setup for monetary policy formulation. Clearer checks and balances were introduced, alongside updated provisions for monetary operations and instruments, and greater exchange rate flexibility. Importantly, the draft sought to safeguard the financial strength of the CBSL, institutionalize stronger fiscal monetary coordination, and impose limits on monetary financing to avoid the pitfalls of fiscal dominance that we had in the past. The new act was consistent with global standards on independence, governance, and accountability. Following multiple rounds of consultations with stakeholders, draft central bank bill was finalized and submitted to the parliament in 2019. However, the political environment at that time prevented its passage through the legislation, and the reform was left in abeyance. Now it is time to take us a moment to ask the question, what if the new CBA had been in place during the crisis or before the crisis? The failure to enact the new CBA in 2019 was, in our view, a missed opportunity of historic proportions. Had this legislation been passed, Sri Lanka would have entered the subsequent years with a stronger, more independent central bank, better equipped to withstand the pressures that ultimately led to crisis, obviously with right persons appointed to the boards. Under the reverse framework, CBSL would have been empowered to resist excessively monetary financing, maintain a credible commitment to price stability, and also allow great exchange rate flexibility at that time this was needed. The prohibition of monetary financing would have helped keep inflation under control. Moreover, the absence of central bank direct financing might have compelled then government to avoid ill-timed and reckless tax cuts and losing revenues of the taxpayers or government. Decision that severely damaged Sri Lanka's external credit ratings at that time. A firm commitment to price stability through a flexible inflation timing regime would have allowed the exchange rate to act as an automatic stabilizer, curbing excessive demand pressures caused by a suppressed currency. These institutional safeguards could have prevented the build-up of vulnerabilities that ultimately push the economy to the brink. So this is a lesson we are learning now. Instead, what prevailed was a public reprimanding of central bank officials by political and fiscal authorities. Actions applauded by many who failed to grasp the long-term benefits of central bank independence. Even if the crisis rooted in fiscal management could not have been entirely avoided, an empowered and independent central bank would have acted sooner and more decisively, mitigating the severity of economic distress faced by people in Sri Lanka. Sri Lanka's recent experience has reaffirmed that central bank independence is not a luxury, it's a necessity, as so often repeated in global central banking circles. Journey towards a modern rule-based central bank policy framework was never mere technical exercise. It was and remains essential to ensure that monetary policy and financial stability policies serve the broader public interest rather than short-term expediency. The efforts undertaken before 2019 show that CBSL recognized this imperative well in advance. Subsequent crises has underlined in stark terms the cost of delay in strengthening independence and accountability, as well as the cost of not exercising available independence and accountability even under the previous legislation, MLA. Now, let me just touch on how central banks help stabilize economy during the crisis, even under the MLA. This shows that even on the MLA we could have done. Patrick Hanuman, the former governor of Bank of Ireland, opined in 2024 that, quote, "It is the central bank's ability to react effectively to crisis situations that most test their skills and preparedness. Over the years, failure to contain financial crisis have entailed enormous economic costs," unquote. As all of you are well aware, Sri Lanka faced such a test in 2022, an unprecedented crisis marked by severe balance of payment pressures, social and political unrest, and profound loss of confidence in institutions, all while an external debt default loomed. The root of this crisis lay in structural weaknesses, persistent fiscal imbalances, and series of imprudent policy decisions that created an unsustainable debt burden and mounting external pressures. Under the intense domestic and internal pressure, the government eventually sought IMF assistance and announced a debt standstill as an interim measure, paving the way for debt second negotiation. This culminated an extended fund facility arrangement with the IMF in 2023. As documented elsewhere, government and the central bank implement a bold stabilization package, notably replacing the MLA with the new CBA, enshrined greater independence and accountability in the new legislation. However, since the CBA was enacted only in September 2023, most stabilizing measures had to be executed under the previous MLA. This underscores an important truth. Even under the MLA, stability could be achieved when the central bank exercises its available independence with strong coordination and with fiscal authorities. Still under the MLA, the CBSL adopted an extensive array of measures to stabilize the economy from its dire straits since the onset of the crisis in early 2022. Monetary policy was tightened significantly in April 2022, following a substantial depreciation of the Sri Lankan rupee in March, as the exchange rate was allowed as a measured adjustment. These measures, though painful, were necessary at that time. They brought inflation down from a peak of nearly 70% in September 2022 to single digits by mid-2023, it's a very short period, and maintained price stability since then. This disinflation process has been hailed globally as one of the fastest in the recent history. Equally critical of safeguarding the financial system. At the height of the crisis, we know the bankers are here, many predicted a banking collapse. Yet Sri Lanka avoided a systemic banking crisis, which could have been the last thing that we would have ended up in a long period of crisis. A remarkable achievement of this, avoiding a systemic crisis, a remarkable achievement given the depth of the economic and debt turmoil at that time. Had a banking crisis materialized, public deposits would have been at risk. People could have lost all their savings, lifetime savings, if that happened. Trust in the financial system shattered and the economic rebound severely compromised. But we were able to protect this even under the previous MLA. As these measures took hold, macroeconomic conditions improved steadily, supported by greater fiscal discipline and consolidation. Inflation fell sharply, risk premium eased after restructuring, the external sector stabilized. Central Bank worked tirelessly to restore public confidence through frequent communications, press briefings, and transparent explanation of policy decisions. This commitment to openness anchored inflation expectations and stabilized market and stabilized the financial institutions, laying the foundation for recovery. So then let me touch on the provisions for independence and accountability in the new CBA. So this is now we are coming into a new CBA, but we talk about this, even we could have approved that if we exercise independence, we could have done. But the enactment of CBA in 2023 marked landmark structural reform, significantly strengthening the independence of the CBSL to form a streamlined mandate. There are key provisions on independence and accountability. These are, I don't want to talk about it in detail because these are all already published in the Act. Everyone can see it. These are key provisions, mainly objects of central bank, monetary policy boards, fiscal monetary coordination, provision of monetary financing, monetary policy framework agreement, monetary policy report annual review, administration of financial autonomy, and also appointment process through proper checks and balances. These are important provisions that enshrined into the new Central Bank Act. Then how do CBA provisions on all these provisions and accountability and activities since the introduction? It's time for us to reflect and review what we have done under the new legislation. Prior to the enactment of the CBA still could finance fiscal deficits through mechanisms such as providing advances to the government or purchasing government securities in the private market. Successive governments increasingly relied on such monetary financing despite its adverse implications for macroeconomic stability. Excessive government borrowing from CBSL contributed to an expansion in the money supply, generating excessive demand-driven inflation pressure. Such monetary financing no longer occurs under the new CBA. That's one important feature. Several provisions have been made in the current Act CBA to increase the accountability of the central bank under flexible inflation targeting framework. If the central bank fails to meet inflation target by a margin determined under the agreement for 2 consecutive quarters, CBSL must publicly explain the reasons and outlines and corrective actions. The Monetary Policy Board and the Central Bank should submit a report to the Parliament through the Minister of Finance explaining the failure to achieve the inflation target, the remedial actions proposed to be taken by the Central Bank, and an estimate of the time period within which inflation would reach the target. It's a very accountable and transparent process now in place. In accordance with those provisions, Central Bank has submitted and made available to the public several reports. As inflation remained below the target, it's not a bad thing for the time being, and recorded a period of deflation mainly due to supply side factors. Such information would be useful in improving the awareness of the public on reasons for inflation or deflation or inflation volatility, and also future path of inflation as well as risk on inflation projections, thereby facilitating informed decision by economic stakeholders for their investment or savings or consumption, leading to well-anchored expectation on inflation. Further, with the improved accountability of the central bank, there is evidence that public trust in policy decisions has improved. They have significantly supported building business confidence, positive investor sentiments, etc. And also, one of the most transformative features in the new Act, CBA, is formal designation of the CBSL as the macroprudential authority in Sri Lanka. This is less talk, but it's a very important portion in the new Act. The designation empowers the CBSL, the macroprudential authority designated to the central bank, by which central bank empowers to independently monitor systemic risk and proactively safeguard financial system stability, an essential foundation for system stability. The Act provides the CBSL with a comprehensive legal mandate and suite of tools to mitigate systemic risk, contain unsustainable credit growth and leverage, and ensure the uninterrupted functioning of the financial system even under adverse conditions. We are now rolling out all this and implementing all the necessary important provisions whenever it's needed. Those are needed. Together, these tools enable the central bank to address emerging systemic risks with precision and agility, protecting the deposits of the public. This is a main mandate for us to secure and protect the deposits of the general public while ensuring the stability of the financial system. Talk about deposits of public, which means not only the deposits of public, general public, private sector, government, also all have stakeholders have deposits in the financial system. We have responsibility to protect the deposits of all stakeholders, including the government. That's why independence is needed for one party not to use the influence to basically, have a risk on the system stability and have a risk on the deposits. To ensure public oversight on the health of the financial system, the CBS is required to publish an annual financial stability. This is another transparency. This comprehensive publication assesses the health of the financial system, identifies emerging risks and vulnerabilities, outlines the corrective measures undertaken by regulators, and tracks progress on cross-agency recommendations. In doing so, it not only strengthens institutional accountability, but also reinforces public confidence in the resilience and integrity of the broad finance system beyond the institution that we command our regulations, that we soon will publish this year's financial stability report. In addition to the reforms introduced on the CBA, CBS also has played a vital role in strengthening the broader legal framework that governs the financial sector. That's our second mandate. Ensuring the institutional reforms are supported by a strong and coherent legislative foundation. We need a legislative foundation to implement all those reforms, with a view to strengthening the resilience of the banking sector and reinforcing the integrity of the regulatory framework. The Banking Act was amended in June 2024. This is part of the reforms of the central bank. This comprehensive reform introduced a wide range of critical enactments to modernize and strengthen the regulatory landscape. Stronger governance requirements were extended across the entire sector, including state-owned banks. Importantly, greater autonomy and strengthened legislation have allowed enforcing similar regulation across all banks, irrespective of their ownership structure. Another key milestone in this effort was the enactment of Banking Special Provision Act of Number 17 of 2023, which strengthens the CBSL role as a resolution authority. So formally, we now have authority for the resolution of financial institution, empowering to take timely and decisive actions in addressing distressed financial institutions. We have already done in operations using these provisions. This landmark legislation introduced critical features, including enhanced resolution powers, robust financial safety net mechanisms, and statutory recognition for deposit insurance scheme, thereby reinforcing public confidence and stability of the financial system. That also established clear procedures for orderly winding up of licensed bank, while allowing resolution measures to be extended to licensed finance companies when appropriate. Those are also coming under our regulation and supervision. We are the resolution authority now. Meanwhile, the central bank has intensified its efforts to advance financial inclusion and financial literacy. That's also supporting the financial stability and monetary policy implementation. It's important to have financial inclusion as well as enhanced financial literacy, while steadfastly safeguarding the integrity of the financial system. These initiatives are not merely social objectives. They are fundamental to ensuring effective transmission of monetary policy and preserving financial stability. These are two important requirements for us to have effective implementation, transition monetary policy to the grassroots level, and also stable financial system, both the financial inclusion as well as the financial literacy. That's why we have taken leadership on those areas as well, and even under the Act we have been empowered. Such engagements are designed to deliver tangible benefits to the public and businesses alike, fostering a more inclusive and resilient financial ecosystem. So next, I will address in the last section of this one, addressing common myths and criticism. It's important to have criticism, and it's our responsibility to explain the rationale for the criticism and some of the myths we need to address for a better understanding of the central bank activities. As Raghuram Rajan, the former governor of the Reserve Bank of India, observed in 2017, quote, any public job involves both undue praise and unfair criticism. Yet it is the latter, the unfair criticism, is that is probably more useful in helping you sharpen your message. In fact, in that spirit, let me make this opportunity to address in this section some of the common myths for us to have a better understanding. The first one, whether this story is there is no coordination between central bank and the government. So there are comments we heard in central bank is a different institution, not coming under the central or legislature or executive. While independence is vital, it does not and must not mean operating in isolation. Coordination between monetary and fiscal authorities remain essential. CBS ensures, our new act ensures, this through the establishment of a statutory coordination council, where representatives from both the central bank and the Ministry of Finance meet quarterly to review economic, fiscal, and financial conditions, emerging risks for better policy coordination and timely decision to address them. We have been having this coordination since the enactment of the CBA. In addition, we continue to work closely with the government, international financial institutions, and other regulators, particularly in the areas of crisis management and financial system oversight. We do this through bodies like in the legislation, the Financial Sector Crisis Management Committee, and the Financial System Oversight Committee. There are two statutory committees under some legislations. The next myth, what we see, central bank, what people call, some people say, central bank is beyond sovereignty and accountable only to external agencies such as the IMF. CBSL is an arm under the law, arm of the state, and functions as a public corporation under the Constitution of the Republic. The CBA provides a robust framework to ensure CBSL accountability to Parliament and ultimately to the people of Sri Lanka. So how that been enshrined in the law? Appointment to the position of governor and members of the CBSL boards are made by the executive and the legislature, subject to checks and balances through the Constitution Council, as stipulated in the Constitution and the CBA both. Once appointed, however, these appointments are expected to operate independently of political affiliation and irrespective of who appointed them. The executive may remove the governor or any board member with the approval of the Constitution Council, subject to safeguards. The CBA safeguards are important because that's only for a cause or misconduct or incapability of delivering duties, then only this process will kick in. Minister of Finance shares responsibility for setting the inflation target. That's another link between the central bank and the government. Minister of Finance shares responsibility for setting the inflation target jointly with the CBSL. So we don't set ourselves the target. It's set by the executive or by the legislation. If no agreement is reached, the Cabinet of Ministers determines the target to be achieved by the CBSL. Unlike in the past, the CBA new act now mandates that Parliament or committees summon the governor, board members, deputy governors, at least once every 4 months to review the CBSL functions. If any policy operation is perceived to deviate from CBSL mandate given by the law, it can be questioned during these sessions, ensuring strong democratic oversight. So we are not out of the system, we are under strong democratic oversight. CBSS also serves as a government representative in fostering international relations. with the institutions, especially such as International Monetary Fund. That's why you see whenever in every program in the IMF, the letter of intent is signed by both the finance minister and the governor of the central bank. Currently, Sri Lanka is engaged in the EFF arrangement with the IMF. While the program's economic and financial policies are prepared in consultation with the IMF, they remain fully owned by the Sri Lankan authorities. The next one, the myth, the central bank final independence is a new concept. Say that because of the independence, we are doing a lot of other things. CBSL's independence is not entirely a new thing, but it has been significantly strengthened under CBA. But under the MLA, earlier legislation, the central bank was vested with high degree of financial independence, the ability to operate without relying on government funding. Accordingly, the former monetary board of CBSL was entrusted with the power to approve the CBSL budget. Similar provisions are available in the current CBA, enabling the CBSL to operate without reliance on government financial allocation. That's a financial independence we already had, but it has been strengthened now. At the same time, all expenditures is accountability of financials. All expenditures are subject to internal governance, board oversight, and external audits, ensuring transparency and accountability. It's like any other public institution, we are also subject to all these oversight provisions. CBSL is also required to maintain transparent financial reporting and is subject to independent external audit. Sri Lanka is one of the institutions which publishes the annual report financial statement within 3 months under the law and share with the parliament and the public. The CB has further strengthened the financial and operational independence of CBSL by further defining the profit transferring ability of central bank. So whatever profits we generate, we should share with the Mr. Treasury. There are clear, transparent provisions how we can share the profits of the central bank. And also there are provisions for recapitalization if needed to ensure the CBSL will remain financially sound and capable of fulfilling its core mandate without the fear of making losses or capital depreciation. We have this recent experience with our contribution to the sovereign debt restructuring. Central bank made the biggest contribution to restructure government debt, where there was an issue of weakening balance sheet, but we are in the process of recovering without having financial support from the government. So we build up on our own. The fourth misconception is about the CBSL, what CBSL can truly deliver. A lot of people look at CBSL as an institution that can deliver a lot of things. Misunderstanding the CBSL objectives and functions often lead to unrealistic expectations about what the CBSL can deliver and how it should operate. Our core objective under the law is to achieve and maintain domestic price stability. Alongside this, we are tasked with, as I mentioned already, securing financial system stability. Both objectives are pursued, aiming to encourage and promote long-term economic style growth. The misconceptions, frequent one, is why the CBSL does not directly promote economic growth or development. That's not our mandate. Questioning often arises as to why the bank does not actively empower businesses, particularly MSMEs or SMEs, and why we don't promote exports or develop industries or alleviate poverty. Those are not our mandates. The answer lies in our mandate. That's very clear. CBSL role is to create an enabling environment for stability within which the government and other authorities can implement all the other policies, growth-oriented policies, and address other concerns of the other economic stakeholders. History has shown that when central banks pursue multiple, if we had in the past to a certain extent, when central banks pursue multiple objectives like having conflict with the key mandate, with limited tools available under the Act, the result is inefficiency and instability. Central bank is fundamentally all about stability, so we don't want to compromise our mandate of stability by engaging in activities which have conflicts with our mandate. Another common misunderstanding is that CBSL fixes the exchange rate. Under the current flexible exchange rate regime mandated by the CBA, the value of Sri Lankan rupee is determined by market forces of supply and demand, as well as in line with overall macro fundamentals. CBSL intervenes only to build reserves and smooth excessive volatility, not to fix or target a specific rate. When these roles are misunderstood, criticism could arise, especially when difficult but necessary policy decisions are made in the long-term interest of the economy. Finally, there's another misconception about this. Because we have been engaged in a lot of other activities, central bank role in conducting agency functions. Since the establishment of central bank in 1950, the CBSL has been entrusted through various statutes with the responsibility of carrying out various other functions on behalf of the government. This is not by the law, by our act, but coming from the other laws. Such functions include first the public debt management, then the management of employees' provident fund, the exchange control, later what we call foreign exchange management, and also now the FIU, AML CFT regulations, financial intelligence, and also the regional development. Those are the additional ancillary functions central bank have been entrusted. As a result, there is a misperception of our role. Need for CBS to carry out such agency functions on behalf of the government has arisen due to the public trust placed in this institution, CBSL, as well as the absence of other acceptable institutional arrangements to carry out such functions elsewhere. So this is coming from a legacy because they have no strong institution to carry out those functions that has been entrusted with the central bank. Now that legacy is now carried forward. And some of these functions have resulted in conflicting objectives. Also, obviously, public management has a clear conflict. And on EPF has a clear conflict with our key mandate. But we have the legacy here. And this conflicting objectives necessitating establishing and strengthening the firewalls in governance structure of CBS. That's how we manage internally those conflicts, is having a strong firewalls in the governance structure of the CBSL. That's how we have been able to manage this. At times, allocation of resources to carry out agency functions is a serious strain, mainly on our human resources, and dilutes the core function of the central bank. This is not the best responsibility, should be central bank. This is only in some part of the world, even in Sri Lanka, that we have this legacy. Accordingly, the implementation of concession loan schemes for targeted sectors by CBSL now has been phased out. We no longer engage in providing concession financing to targeted sectors. The activity that we did under regional what they call regional development department, those engagement now has shifted towards enhancing financial inclusion and improving financial literacy. So, now focusing only financial inclusion and literacy. That is important to deliver our mandate. This is in line with the government's efforts to strengthen, and also at the same time there's a different institution being developed by the government. Strengthen under the Ministry of Finance, ensuring more focused institutional framework for such initiatives. Now there's what they call different finance department under the Ministry of Finance. They undertake, take core this function. Another movement of this agency function is a movement transfer of public management function under the new PDMO Act. Now it is currently underway, its transition is happening with the establishment of a dedicated public management office under the Ministry of Finance. This marks another important step in ensuring the operational responsibilities are properly aligned with the appropriate institutions while allowing the CBSLs to focus more on its core monetary and stability mandates. Looking ahead, as the market matures, as the institutions are built up, suitable institutional arrangements are made, the CBSL has no objection to transferring the remaining agency function out of the central bank, out of our mandate. This will enable us to focus fully on the CBSL's core objectives and better utilize our resources towards maintaining stability. This is one of the reasons why we 70th anniversary theme is stability for prosperity. So in conclusion, let me make a few comments in summary. Why we need to preserve independence that we have gained so far. In an often complex and unpredictable political and economic environment, preserving the independence of the central bank is not merely important, it is indispensable to safeguarding the stability and prosperity of our nation. History and global experience demonstrate that central banks with clearly defined mandates, well-established boundaries, and adequate operational autonomy are best positioned to deliver on their promises. The clear mandate not only guides the institution but also provides a transparent benchmark for accountability for both policymakers and the public. Narrowly defined roles prevent central banks from straying into policy domains that rightly belong to elected governments. The CBA enshrines this clarity for the central bank. Then on transparency and communication, on our mandate, policy actions and other rationale are essential to building public trust. Adopting global best practices in disclosure and accountability serves as a powerful safeguard against undue influence. At the same time, independence does not mean isolation. Effective macroeconomic management requires constructive dialogue and coordination between the central bank and the government, particularly on the fiscal, monetary, and finance sector policies. CBA provides a legal framework for such coordination without compromising autonomy. Recent experience during Sri Lankan economic crisis and finance sector vulnerabilities and debt restructuring illustrates how close collaboration anchored in mutual respect for the roles can accelerate stability and recovery. I'd like to quote again Christine Lagarde, former MD of the IMF, now the President of the European Central Bank. She recently observed, quote, "While recent research suggests that de jure central bank independence has never been more prevalent than is today, there is no doubt that the de facto independence of central bank is being called into question in several parts of the world. That we see this debate." Unquote. In this context, a timely reminder to policymakers across the world of Alan Binder's enduring advice, quote, "Central bank independence is a fine institution that ought to be preserved where it exists and emulated where it does not," unquote, could be profoundly relevant in the current environment. Having witnessed both the benefits of independence and the cost of its absence, I firmly believe it is the responsibility of future generations to protect, preserve, and promote the independence of the central bank. Only then it can continue to serve as a steadfast anchor of stability and essential foundation for sustainable growth and shared prosperity. Thank you very much for listening.
Thank you, sir, for delivering an oration of exceptional insight and profound significance on the theme, Why Central Bank Independence Matters in Crisis Recovery and Beyond. Your address has powerfully underscored the vital role central bank independence plays, not just as an institutional principle, but as a practical necessity for safeguarding monetary stability, restoring confidence, and guiding sustainable economic recovery. In times of uncertainty and challenge, your leadership and vision have been instrumental in steering our nation's economic path with clarity and resolve. On this momentous occasion, the members of the Governing Board and the Monetary Policy Board have requested an opportunity to present to the Governor a memorial plaque to recognize his commitment and efforts in the aftermath of our nation's most challenging economic crisis in our post-independence recent history. It is now my privilege to invite Mr. Nihal Fonseca, the longest-serving member of the boards who has been entrusted by both boards to make the presentation on their behalf, to come onto the stage. Mr. Fonseca, we warmly invite you to the stage, please.
Governor of Central Bank, members of the Governing Board, members of the Monetary Board, officers and staff of the Central Bank of Sri Lanka, distinguished invitees, ladies and gentlemen. I am actually privileged and honored to make this presentation to the Governor, Dr. Nandalal Veerasinghe, on behalf of each and every member of the Governing Board and the Monetary Policy Board. And, Madam, I would appreciate if you could please read out the citation.
On the occasion of delivering the 75th anniversary oration of the Central Bank of Sri Lanka, this plaque is presented by the members of the Governing Board and Monetary Policy Board of the Central Bank of Sri Lanka to Dr. Nandalal Veerasinghe, Governor, in recognition of his outstanding contribution to the stabilization and recovery of the Sri Lankan economy in the aftermath of the economic crisis of 2022. May I now kindly invite Mr. Fonseca to present the memorial plaque to the Governor Dr. Nandalal Veerasinghe in recognition of his exemplary leadership and exceptional service to the nation. And I invite Governor to the stage, please.
Thank you very much, all the members. I think indeed it's a surprise. Only now I could know there's something like this. Thank you very much.
Thank you, Governor, and thank you, Mr. Fonseca. To offer our sincere gratitude to all who made this day possible, I now invite to stage Mr. Sirikumara Kudagama, Assistant Governor of the Central Bank of Sri Lanka, to deliver the vote of thanks. So the stage is yours.
Governor of the Central Bank of Sri Lanka, members of the Governing Board, members of the Monetary Policy Board, distinguished invitees, colleagues, ladies and gentlemen, good morning. It's my honor and privilege to deliver the vote of thanks on this historic occasion as we bring to a close the 70th anniversary oration of the Central Bank of Sri Lanka. This morning, we gather not only to mark the passage of years, but to reflect on the journey. For 75 years, that is 3/4 of a century, the central bank has stood at the heart of our nation's economic life, tested by challenges, tempered by trials, and recent times called upon to guide the country through its gravest crisis in living memory. By perseverance, prudent action, and an unyielding sense of duty, the institution stands today on steadier ground, cautious yet resolute. It is fitting, therefore, that the 75th Anniversary Committee invited the Governor himself to deliver today's commemorative oration. What we heard in the oration was not merely an address, but the voice of one who bore the burden of responsibility when the nation most required it. With clarity and foresight, the Governor bound together lessons of the past, present strategies, and future aspirations. And for these insights, as well as for the inspiration they will continue to impart, we offer our deep gratitude, Governor. With your indulgence, I wish to depart briefly from tradition. I pay respectful tribute to those pioneers and colleagues of this institution who served with integrity and honor and whose contribution left a lasting mark. It was their example that gave the central bank its enduring strength and credibility. Institutions, as you all know, when guided by the legacy of those uphold the highest standards, remain capable of learning, of renewal, and of advancement. To all dignitaries present here, to all dignitaries, invitees, and colleagues, your presence dignifies this occasion. We are grateful that you have joined us to bear witness to this moment of both remembrance and renewal. To my colleagues of today, who serve with professionalism, courage, and quiet dedication, your service is valued beyond measure. It is your steadfastness that preserves the credibility and resilience of this institution. I wish to place on record our appreciation of the 75th Anniversary Committee under the able leadership of the Senior Deputy Governor, whose careful planning and unwavering commitment ensured the success of these commemorations. Finally, I extend sincere thanks to those whose unseen efforts brought this ceremony to life: the Communications Department of the Bank, the Economic Research Department, the Facilities Management Department, Information Technology Department, the Secretariat Department, and the Security Services Department. Your devotion to detail and sense of duty have ensured that this occasion was marked with dignity and grace. Finally, I would say, may this anniversary be more than a celebration of years. May it be a reminder of our duty, a call to service, and a pledge of commitment, so that the central bank endures not only as an institution of longevity, but one of trust, professionalism, and purpose. Thank you.
Thank you, Mr. Sirikumara, for your warm and sincere words of appreciation. Ladies and gentlemen, as we conclude this memorable ceremony, on behalf of the Central Bank of Sri Lanka, thank you for being a part of this historic milestone. Your presence today has added great meaning to this occasion as we honor 75 years of service, resilience, and progress. As a part of the Central Bank's 75th anniversary celebrations, we are pleased to announce a special art exhibition titled 70 Years, 75 Perspectives, which will be held at the Economic History Museum Central Point building on the 29th and 30th of August 2025 from 10 a.m. to 6 p.m. This exhibition will showcase 75 outstanding artworks selected through an all-island art competition in both school and open categories. It will also feature retrospectives of Sri Lanka's social, economic, and political history and a special commemorative video that reflects the proud journey of the Central Bank of Sri Lanka. We warmly invite you all to attend this unique event celebrating artistic creativity and the enduring legacy of the Central Bank of Sri Lanka. Now I kindly ask you to rise and join us in singing the national anthem of Sri Lanka. Following the national anthem, you are warmly invited to join us for refreshments served at the atrium lobby. Once again, on behalf of the Central Bank of Sri Lanka, thank you for joining us in commemorating this important occasion. May the journey ahead be as remarkable as the journey so far. Thank you and have a pleasant day. Let us all now rise for the national anthem of Sri Lanka.